Fed minutes could bolster bets for 75 basis point hike in July. The Federal Reserve will unveil details of what policy makers debated final month, which can shed light on how they view the near-term course for hobby rates amid surging inflation and signs of a slowing economy. Chair Jerome Powell has said the Fed should hike through both 50 basis factors or 75 basis factors in July. He made the remarks at a June 15 press convention after coverage makers raised rates by means of 75 foundation points in the largest hike considering 1994. The Fed will put up minutes of the meeting at 2 p.m. in Washington on Wednesday. Several coverage makers, for the reason that June selection, have said they're open to going large again at their assembly later this month to cut down the most up-to-date rate pressures in 40 years. They encompass Fed Governors Michelle Bowman and Christopher Waller, in addition to nearby Fed Presidents Loretta Mester, Mary Daly and Charles Evans. Updated quarterly projections of the 18 policy makers show the median player at the Federal Open Market Committee sees prices growing to 3.4% at 12 months' give up and 3.8% subsequent year, from a cutting-edge target range of 1.5% to 1.75%. We might be searching out clues, approximately the indicators that the committee will be weighing in its upcoming July meeting, because it deliberates whether to hike 50 foundation points or 75 basis points, mentioned Jonathan Miller, economist with Barclays, Lon, BARC, plc. The minutes might support the idea that the FOMC is prioritizing price stability over reaching a tender landing, he said. The committee's view of inflation expectancies may be a prolonged topic of debate. What economics says, we assume the dialogue in the minutes to signify that coverage makers were involved about the unanchoring of inflation expectations. There can be a couple of references of ways high gas and meals fees ought to affect households' inflation psychology, justifying the Fed's shift in putting extra cognizance on headline inflation measures in preference to simply core measures as they commonly do. Anna Wong, chief U.S. economist inflation. In his press conference following the Fed's closing assembly, Powell cited the initial University of Michigan survey of inflation expectations as some of the elements prompting coverage markets to raise charges by way of 75 foundation factors in an overdue shift. The preliminary reading showed Americans watching for 3% inflation over the next 5 to 10 years, however that became revised down to a few 0.1% inside the final document launched June 24. Are they placing greater weight on customer expectancies, which can be typically impacted by way of food and power fees, or are they worried about expert forecasters and markets, which advocate they have got the issue below managed, said Drew Mattis, leader marketplace strategist with MetLife NYSE, Met Investment Management. It appears they are more targeted at the patron, however that is risky given how inflation expectancies are pushed. While Powell has mentioned now isn't always the time for nuanced readings on inflation, any discussion of the underlying dynamics of expenditures can be essential, given the growing divergence among the Fed's preferred measure of inflation, based totally on personal consumption, and the patron rate index, mentioned Luke Tilley, Wilmington Trust's leader economist. The minutes can also offer insights into how the FOMC could view a decline in monetary interest. A variety of Wall Street economists have lowered their forecasts for second quarter boom, and the Atlanta Fed's famous tracking estimate presently suggests a contraction for the quarter, even as the hard work marketplace has stayed sturdy. Slowing growth. While Powell has declared that the conflict towards excessive inflation is unconditional, the committee could have various views on whether or not it'd be vital to alter plans in light of any softer data. The most critical element may be any discussion around what might reason the Fed to deviate from the projected course, mentioned Stephen Stanley, economist at Amherst Pierpont Securities. Powell has very lots emphasized the inflation-fighting part of the activity. The boom as opposed to inflation components of monetary coverage come into tension if the financial system does gradual down. The odds of a U.S. recession within the next year are 38% within the next 12 months, in step with the latest forecast of economics, after purchaser sentiment hit a record low and hobby rates surged. While FOMC members aren't diagnosed by using name, the minutes could also provide perception into whether others at the committee shared the issues of Kansas City Fed leader Esther George, whose dissent from the 75 basis point hike amazed Wall Street.